Okay, good morning, everybody. This is Kel here. Can you hear me loud and clear? If yes, give me a thumbs up. Okay, all right. Yes, I'm equally excited. Of course, today gonna be my long day. I'm gonna have my battle of the sexes later on from 10 a.m. onwards. I'll be there at location all the way until 6:30 p.m. Then tomorrow I have a revision in the morning. Then after that I have another revision in the afternoon. Yes, a second round. That is for my PTP members. So I'm gonna have a very long weekend. Okay, very long. So I'm very excited because I can get to see all of you guys. Okay, so now we're gonna start this morning with our daily MAO. Now today I added a lot of stuff inside there, so it'll be about a 45-minute session. Okay, if you want to, if you're busy, no problem, you can watch the replay, and that should be about 3 to 6 p.m. Okay, it'll be on YouTube. All right. So good morning to all of you. There's morning, 34 of you are so early in the morning. Okay, let's start the morning with my PowerPoint. Right, can you guys see my PowerPoint slide once again? Just to verify, if you can see my PowerPoint slide, give me a thumbs up. Can you see my PowerPoint? Okay. Can I? Okay. Okay, good. Thank you so much. Let me just do some adjustment. Every time I do some small adjustment here and there. Okay. All right, so today is the 18th of December 2020, Friday. All right, we are just a few days away from the big conjunction of the planets. Some people ask me, Kel, some people say that it's a good time to watch the planet. Now, do understand this. This is very different from the eclipse. Eclipse, they did tell you that to try to avoid. But planet movement, well, technically they never say anything about that. But it just have this sort of planet movement, and that's happening in 3 days' time. That is the nearest you ever get between the planets. That is about 800 years ago, the last thing that happened. Okay, so the thing is this: is that the reason why Bitcoin is surging so crazily? I don't know, right? But apparently, many people text me on the site and say that, Kel, you are not accurate. I say, why? You say that Bitcoin will only hit 23,000 in April next year. You're way wrong. You're 4 months way wrong. Okay, if you look at that itself, then I'm very wrong. Okay, I'm very wrong. All right, before we start this morning, once again, all right, guys, what will be next for coming on? I'll share with you more stuff like this. But you can see right now, indeed, Bitcoin has reached $23,000, all-time high. All right, now think about this. Just a few years ago, when Bitcoin slammed down all the way to 3,500. And I was telling people that if you really have money, you don't mind losing it at all, just dump into Bitcoin. That was 3 years ago when this already happened. Then, of course, progressively, it went up to 15,000. I said that, well, got money, just buy. Then, of course, at 19,000, that was whereby I went official. All right, on YouTube. All right, on 3rd of December 2020, I purposely gave this caption: Bitcoin will see 23,000 by April 2021. And of course, what happened? People like calling me on the site and say, Kel, you're crazy, you're nutcase, you are wrong, you are this, you are that. Okay, whatever. End of the day is Bitcoin has reached 23,000 on the 17th of December 2020. All right, so that is exactly what happened. But the question mark will be now, okay, Kel, you got it right. So what's next? I will tell you what's next later, and it probably will shock you, okay? All right, so before we start this morning, once again, disclaimer as usual, my sharing should be only be used for learning aid. If you decide to really invest with your money, please make sure all the trading decision is on your own. The risk of losses in trading can be substantial. And of course, please carefully consider that such activity is suitable for you in the light of your current financial status. Okay, all right, and condition. Right, so I need to do a disclaimer right now. Everybody key the word disclaimer right into the group chat. Recording this, I need to hit, as I say now, I have 101 people, so I need to hit at least 50, all right? If we don't hit 50, I cannot continue, all right? It's not on purpose, but this is to protect myself and also to protect you, because you need to know that whatever I share is really based on my personal take. And if you use it, I'm happy for you, you make money, but if you unfortunately lost it, right, then you need to be self-liable, all right? Okay, I cannot be like, wow, taking care of it. Okay, all right, thank you. I need 2 more. All right, 2 more and we are done. Okay, come, let's just do it. Okay. Okay, thank you. All right, so let's continue. Now, this morning, the Dow went up again. Yes, I tell you that the Dow will keep going higher. I keep on saying that the Dow will keep on going higher. There's no way to stop the Dow. There's no way to stop the Dow. I already say many times. Why so powerful? Because the Federal Reserve is there. As long as the Federal Reserve is there, there's no way the Dow will be going down. I already said that many times. All right, so the thing is this, because now the traders are betting that there'll be a fiscal stimulus package coming in, and they were saying this was Wednesday, but it didn't happen. So they say Thursday, it didn't happen. So likely today, Friday, this is a typical thing. If not Wednesday, must be Thursday. If not Thursday, must be Friday. If not Friday, must be Monday. I mean, eventually it will come out. I can tell you this, eventually it will come out, because if not, we have a problem, because the government will go to shut down again. All right, so I don't think it will not come out. So there will be a sudden knee-jerk effect later on when this thing happens. But of course, I would like to share this with you. If this really happened, if the news comes out, right, the market will not buy into it. You heard me correctly. There will be a knee-jerk effect. That is 100%. But once the knee-jerk effect is over, the market will go into profit-taking mode. Okay, this is very clear-cut, because the market is buying on anticipation. This bipartisan deal itself, you look carefully, there's a lot of things that it will not be so easy. The deal is big, but when the money comes to the community, it's going to be like drips and water. It's just like, you throw a big loaf of bread down, end of the day, you only receive the crumbs. Okay, so that's why the market will sell upon the news. You heard me correctly, so take that somewhere. If it really happens, please know what to do. All right, okay. All right, so the thing is this, I was watching this and I really like what this guy said. Now, Tom Lee is really, in my opinion, right, since we are in, I believe he's Chinese, all right, so my point is this, all right, Tom Lee is one of the analysts that I really give my hats off. I mean, he's not only correct, he's also very, I put it this way, very upfront, very forefront, okay, with his sharing. So when I saw this video, right, fund strat Tom Lee expect the S&P 500 to rally in the second half of 2021. Now, when I saw this caption, right, straight away my thing comes that way. Why everybody is looking at the second half of 2021? Then what is the first half? How come no one talk about the first half? So of course, everybody's saying that the vaccination will take about 6 months from now to really get to most people. So only later on, people will go back to work, people will be much more protected from the COVID-19 and stuff like that. Okay, I buy you. But none of them say what this Tom Lee say. Apparently, I went through this video. It's a 4-minute video. You can go on CNBC to watch it. Now, Tom Lee says this because he was being asked why second half of the year. So Tom Lee says that because he expects the market to correct in the next 2 months by at least 10 to 15%, or around 10%. Of the quote is underquote, overquote his words. It's about 10%. Okay, that means that he's saying that in January and February he do expect the market to pull back by at least 10%. But the moment that happened, he will be going in to buy because he's expecting a 25% rally from that point onwards. So which means that, right, he's looking at S&P 500 to go past 4,000 points by next year. Yes, you heard me correctly. He says it's going to be a target that he's going to set, and he set above 4,000, okay, for next year. Okay, in fact, the figure is 4,300 to be precise. Okay, so apparently it's all right. This is something that I will, well, in my mind, that was what in my thoughts, because I did share my friend. I said that, right, if there's going to be any black swan event, it will happen between now till February. And if it happens, then what will happen next is the market will sell. And when the market sells down, there'll be so good value to buy. And then after that, you buy from there and hold it for the next few years. Yeah, you heard me correctly. Yes, exactly. No, it's not because I heard of Tom Lee says this and I tell you that. I told you guys before, there will be a good time, because if the Federal Reserve is taking the position of I don't care, I just want to buy, then of course, when there's a black swan event happens or a correction happen, what naturally will this is that the market will sell, and then you hit a low, people say get out, panic, and you go in. All right, you heard me loud and clear. Huh? So apparently, well, when I saw this video, I was like, hey, come on, it's the same thing. Okay. Right, so the thing is this, last night Dow Jones went up by 148 points. You can see it's so flat, all right, it's just like so flat at 30,300. I told you before, the Dow has a very strong resistance at about 30,300 to 30,400. Okay, this is a very strong resistance over there. And you can see throughout the whole day itself is like that. But you should know there's this article that I wanted to share with you, but probably need to do it next week then, is that actually, if you notice carefully, during the US timing, the Dow Jones don't really move. It's only the time from now till the US timing, the Dow always move. You realize that? So majority of the upside recently for the last 6 months, most of the gains are done in the Asia time. So that's why a lot of activity are traded in the Asia European time. But most of the market will just basically grind in the US time. So this is very interesting here itself. Okay. All right. So the thing is, the Congress obviously is closing in for the 900 billion COVID relief deal, as Americans are still waiting for it. Now, do note once again, I said earlier already, they are trying their best. The Senate leaders like Mitch and Chuck, they are trying their best to make sure it happens. But if they doesn't do that, the government will go into shutdown on Saturday, which is tomorrow, and 12 million people will lose employment benefits the day after Christmas. Okay. Now, of course, when you see this, it's like it began to spark my memory back again in 2018, whereby the Christmas was so terrible. I remember in 2018, all right, the stock market was plunging like crazy. No one had the appetite to go to a Christmas party because the market was just plunging ridiculously. But do understand, back then was because Federal Reserve basically hiked interest rates. So that's why the market soaked down. So this time now, with Federal Reserve not going to hike interest rate, in fact, they're going to put in more money in the system with the stimulus package itself, right? It's going to try its best to give a pretty good Christmas to everybody. So undeniable, as long as the market do not comes down, all right, it's not necessary to exit from the stock market. But I will say this up front here, the frenzy has hit all-time high. You can see from the stock market, the NASDAQ, the Russell, the Bitcoin, the Ethereum, everything, even gold also went up recently. So that means everything that has to do with the US dollar is going up. Now, why is that so? Obviously, because the US dollar has been coming down. Now, if the US dollar can be coming down, what does it tell you? It actually means that, right, they are basically lending money. I mean, they're taking the futures money for this. And if this is, it's going to be bad, because why? Let me share with you this. We saw the weekly jobless claim unexpectedly rises. The weekly jobless claim, people losing their jobs, okay, unexpectedly rises, and it hit the highest level since early September, okay? So this is something that, again, it shows that the economy is not doing as well. But the problem is, why not? Because, as I say, the money did come down, but it just went to other people's hand. It didn't really go down to the people, you know, the things of the people. So that's why even the $900 billion comes in, it will not really help. All right, it has shown. So now you can see from the chart wise itself, the initial jobless claim is picking up again. The last 2 weeks of December has went up. So if this week, I do suspect that it will continue to go up. And if you hit 1 million, then I believe the market will press that button again, that 1 million level mark. Okay, so watch out for that. You can see that this is just only the year itself. This is the entire last 12 years. So apparently you can see very clearly that, again, the numbers, when it stretches up itself, right, the recession will increase. So we are already in recession, but the market doesn't buy into that because stock market is up. So in terms of number, we are at a ridiculous level. That is the national average the last 12 years. We are way above that. So you can understand that actually the whole economy is doing very, very badly. Very, very badly. But of course, the stock market is not reflecting the real stuff of it. So people just say, okay, never mind, I can be jobless, but I can trade stocks. So the question comes in, what if I'm jobless and I trade stock for a living and I'm making money every day, just buy. Okay, so suddenly a black swan event comes in, or suddenly the boys want to take profit, the stock market comes down. So these traders, they can't short, they can only buy, or they are used to buying. So what will happen? Poof, the money will be all gone. They will lose a lot of money. They are not employed. They have no money. Guess what's next? Think about that, okay? Guess what's next then? So that is whereby it gets a little bit scary here, because now everybody is basically buying their hopes that the market will never come down. So if you watch the Greed of Men, the movie, the Chinese serial that I watched last time, this Cantonese one, it's just that when everybody is buying, cheering, right? There will be that day, it will just kiss the top of the highest point, and then it will just pull back so fast, with great volume, So do note the day itself, when you see the stock market U-turn backward and the volume is higher than the average of the last 10 days, that is the day. Be very careful of that. Write it down somewhere. If ever one day the stock market pulls back, you can form a doji, doesn't matter, but the volume is way, way higher than the last 10-day average, that is the reversal candle. Okay, you heard me, yeah? All right. So the COVID update now is that because now people are getting worried because now the vaccine is out, but apparently there's a lot of confusion about the next shipment, how it's going to be delivered, who receive it first, who should get it first, and yada, yada, yada. And obviously the numbers are still increasing because yesterday we have hit a new record level for USA in terms of the new deaths. It has surpassed the 3,200 record. Now it's 3.5, meaning 3,500 people just gone in just a single day. That is really very crazy. And the number have again mounted up again. So all I can tell you this is not going to stop the market. I mean, seriously, this is not going to stop the market, but this is not going to help. All right, the numbers are just going to keep on going up and higher. All right. Okay. Okay, I hear some noise at the back. Let me just remove the mute on. Okay, yeah, thanks. Okay, so you heard me. And this is the new death. You can see that this is a chart on USA. I purposely blocked it out. So since November, the death numbers are really increasing. Now look at it carefully, my friend. Now you like it or not, I want to share this. This is the average death. That's about 1,000 people. Then within a month, it hit 2,000. Then now within a month again, it hit 3,000. You see that the average death was about 1,000. But now it's basically doubled to tripled. Okay? And it's still surging. So the thing is this. I mean, I put it this way, no one like bad news, okay? But we have seen a lot of forecasters already informing us that, okay, the people's death will increase in folds in the next few months because of that. So you think about this, if the stock market is the one going to be leading the market while this pandemic is still ongoing, the stock market really cannot come down. I repeat, the stock market really cannot come down. If the stock market comes down, all hopes will be lost. And when that happens, the whole thing will collapse. The whole thing will collapse. So that's why when you're having hopes, you really have to put hold on it. So traders, as long as the market is still moving upwards and still holding your technical level, you stay with it, okay? But if the market turns, get out. You really must head for the hills already, okay? All right, so you can see right here itself, this is the US dollar. Now you understand why yesterday the gold went up so much. Yesterday, gold from 1864 went past our target 1869. We have profited from there and it went up higher. Now again, I was being accused. Kel, how come you didn't predict the higher level? I said I gave 1872, I gave 1880, I gave 1888. I mean, seriously, guys, I can give all numbers in the market, but end of the day itself is about yourself. Now, for me, we already got at 1869. I'm happy to profit, not extremely happy, but well, it is. Because, I mean, seriously, as much as I expect the dollar to fall, but I did not expect the dollar to fall one-way traffic down. You see, look at it, the dollar, keep on coming down. That is 50 basis points in a single day. So it's just like you buy something for $1 and now it's 95 cents. Yeah, in a single day. You understand the difference there? Yeah, you just buy something for $1, exchange rate, right? Then next day is 95 cents worth. Think about this. It's very scary. Imagine you're doing import and export and this thing happened to you. Oh my God, this is going to be a killer. Okay, so let me just show you now with the charts. Let me just bring it up for you. Give me a moment. Okay, let me just find my charts. We cluttered everywhere now today. But I'm doing so many preparation for later. Where are you? Here we go. Okay, so this is the US dollar chart right now. Okay, you can see that. Okay, and then you just upload a little bit. So you can see this particular article, the US dollar is getting crushed. And here's why you can thank the federal for that, obviously. I mean, they're just pumping relentlessly. So obviously, what do you expect? You can't expect anything good out of it. So you look at the last one whole month, the US dollar chart. Look at it. It has came down from 92 all the way to 89. Okay, this is how how bad it is. But is that all? No. Look at it, 3 months. Okay, this from 95. Look again, 6 months. Look at it, it's 6 months, 1 year. From the high point itself, about here at 102, the US dollar have lost more than 11% or 13% to be precise. All right, all the way down. So this is something interesting. In history, no country has a weakened dollar, a weakened currency, and the stock market goes up. Don't have one. Only now you have. Because why? Because the Federal Reserve are buying anything that's available in the market. Buying. All right. So that's the point. So the question is this: if you are the Federal Reserve, you're the one buying, then who is the one selling? That's the first thing. Second, if you keep on buying yourself, inflation will have to go up naturally. Because why? The US dollar depreciate in value. So all the commodities like food, all right, all this commodity like corn, wheat, soya bean, all these will increase in price naturally. That's why gold went up, crude went up. So when the costs become expensive and the people are not employed, guess what will happen next? People will rely on relief, like what they are. They need it now. But the problem is the relief doesn't come to your pocket. What's the question next? So this is going to be a very silly thing that they are doing. It's a very silly thing that the Federal Reserve is doing. But the market doesn't bother because the stock market is up. As long as the stock market is up, no one will actually bother. So let me just share this with you. Now, this is the chart of the US stock market. You can see right now the volume is still pretty nicely. It's still at average about 300 million to 400 million. So it's still okay. So I'm waiting for that day to come. That day is something like this, okay, whereby suddenly the market just pull back significantly and the volume just surpassed norm, right? Norm is about 480 to 500 million and above. Okay, so I'm just waiting for that day before we even turn position. Okay, you heard me loud and clear. Okay, all right. So, well, this is the Northman Trader. Now, this is the price percentile oscillator. Now, basically means that, right, in terms of the closeness between the market and the Bollinger Bands. Now, obviously, I'm not a Bollinger trader, but I just take it as a reference guide because you can see that whenever the market is stick to the Bollinger Band, the top half of it, and it comes with the PPO that is at the high level of about 15 to 16, you can naturally see that the market will have temporarily pulled back. But what we are seeing now is there's no pullback since 1999. I repeat one more time. Over the course of the 1, 2, 3, 4, 5, 6, 7, 8 instances over the last 23 years. The last 8 instances when this happened, the market will pull back, but not this time. So are you telling me that history for last 8 times has proven itself, but this time around you are different? To me, it's because you are manipulating it. So once you manipulate it itself, right, it's only one day it will just explode. You understand? Like all Ponzi scams itself, when you keep on try and build, that will be that day. I don't know which day it will come. And when that day comes, the hurt, the pain is going to be so terrible that everybody will just freak out. So that's why I will say this, my friends. As much as you're buying, you continue buying, no problem. But your stop loss order, your SWL, please ensure you place it there. You don't want to be caught by this. This is scary. 23 years of record here, you don't want to mess with it. Okay? All clear? If everybody clear, can you key the number, the thing called PPO? PPO. All right. You can actually Google on this. It's an indicator. All right. Not that popular between people, but it's called the percentage price oscillator. So it is a technical analysis momentum indicator that shows the relationship between the two moving average in percentage form. Okay, so you can read into this. It's pretty good, in your opinion, as a form of U-turn guide. Okay, so but then again, the market seems that it doesn't care. Okay, all right. All right, so now the next thing is the VIX indicator. Now, VIX basically the last few 2 months, the VIX have been jumping down very fast, meaning there's a lot of gaps, So from Northman Trader, he mentioned that, right, there are many gaps in the VIX. But if you look carefully, dear all, you look carefully, although there's a lot of gaps in the VIX, if you notice this, the VIX are actually moving upwards already. Can you see that? The VIX basically went to the low end. Okay, let me try to do this again. From late November to December, the VIX indicator went down, all the way down. So when VIX works in this way, if VIX is at the low end, the market should be at a high end because people are not worried. But you look carefully, the VIX indicator from December the 1st until to date, right, the indicator is actually up. Although now there's again some pullback, right? There's some pullback here because again, the buoyancy, the optimism is there. But you look at from December itself, with the stock market higher, it doesn't really gel equally. Now, next thing is this. There are so many gaps, right? These are all the gaps, all these are gaps. So what will happen is, as you know, in technical analysis, where there's a gap, if the market goes into a panic mode, okay, a panic mode itself, right, it can go even crazier. Is this a teacup for VIX? Well, you can say that. It can be looked at a teacup if you want to look at it, right? I mean, different people, different views. This is like a teacup formation. It can be like that too. But my point is this, for the VIX indicator itself, right, there's so many gaps. So what will happen if we're talking about foresight, not hindsight, foresight? If suddenly any black swan event happen, the VIX indicator will just surge like crazy, which translates to people getting panic. And when a panic button is pressed, everybody panic together. You understand my point? Okay, just visualize this as well. If everybody's in the cinema theater, okay, I mean, it's not a very good example, but just give you an idea, analogy, example basis. So the thing is this, there's some fire at one corner of the cinema, just a small fire, all right? So everybody stand up and supposed to walk towards the exit door, correct me, in a very orderly manner. Suddenly the fire got a little bit bigger and someone at the back silly and just shout, fire, fire, fire. So what happened? Everybody will just rush to the door, and what happened? The human jam will jam the door because everybody is not going to give way to one another. What happened? The panic will rise to all-time level, and that's what happened. So I'm trying to say is this, now we are still at we know the fire is somewhere in the corner in the economy, but because the Federal Reserve is keeping a very nice shield on it, no one can see it. So eventually, this thing will spark a little bit of fire, the smoke can be seen, everybody watch it, there will be some orderly movement, but when someone starts to shout, that is where things happen. So dear all, I'm just informing you these numbers are there. We don't want to wait for things to happen, so just be careful, okay? Just be careful. I'm not saying the market will crash. I'm just saying that, right, the numbers tell us we have to be actually very careful, okay? Now, this is the Dow Jones last night, all right? Just to recap what happened last night with our trade with the boy system. So the system tells us as long as the market stays above the this level, which is 30165, is a buy. So yesterday I already told you, as long as the Dow stays above 30165, it will be a buy. You don't need to know what's the reason because the market don't really bother. But the boys are buying, the KSI was green, so you just had to buy. So that's why the Dow from 30165, it goes all the way up to close at 30313. Okay, all right, you heard this clearly. So the macro picture can be terrible. Okay, the macro picture can be terrible, but the market is still buying. So that's the reason why I say we need to follow the micro picture when you trade. Macro picture is you want to invest for long term, like buying the VIX call, you to sell the VIX put. You can consider that as macro picture. The risk reward ratio makes sense because, well, at this level now, the downside is pretty limited in my opinion. You can buy it for macro picture investment. But again, it carries risk because why? The market is still on the other side. Okay, you heard me loud and clear. I mean, those who text me on the site right now, you should hear what I say. So let's look at the Dow yesterday. You can see the moment this happened, beautiful. The Dow opens, then it came down. Once it reached this point, 30165, it stopped there beautifully, as if that the market know our trade with the boy system. That perfect. Then after that, the color changed over from red to yellow is a buy. It hang at OP for a short moment. Then that is where this thing changed. Look at it. The boys came in. The boys came in. And the moment the boys came in, wow, look at the Dow. Just can't stop anymore. So that is why you need to have this system to help you, to give you precise thing what to do, what level to watch out for, and what indicator that will help you. All right, this is something very different from those conventional. So of course, there will profit taking after that because the boys came in to sell a little bit. But towards the last half an hour, last 2 hours, again, the market was pushed up. And obviously, I don't need you to tell me, but you should know who came in to buy. They have been doing this. They have been doing this every last 2 hours. They'll come in and just buy relentless anything that's available in the market. I mean, what's the point? Well, if you don't margin calls, talking about this bookkeeping, obviously, as long as the price is higher and higher, you can use leverage upon leverage upon leverage. Yeah. You see, if I have buys a position for $1 million and then I push a price to $2 million value worth, I can have the next day take the $2 million worth value, go and do some mortgage or get some loans, and then buy up to $3 million, and I push it to $4 million, and I repeat this every single day. So basically, it's building a bubble out of leverage and the value of the price. By one day, if the market pulls back now, all leverage, all margins will lead to one severity, and that's called margin call, and that's it. The whole thing will just break. You heard me, guys? Because when you do an exercise like that itself by buying the last half an hour to an hour, we all know in the financial market, we know what you're trying to do. You're just trying to manipulate the closing price for you to extend your leverage and your margins. That is very simple. So that's why people who don't understand this, they will be buying on that. So if you go back in Lehman time in 2007 and 8, they were doing this every day. So as long as the price of property doesn't break, no one will be hurt. But the moment property price cracks, the whole thing will just collapse. So are we going to see the same thing in Lehman in terms of fashion? It's going to be the same thing because back then itself, it was because of the same thing, credit and leverage. Okay, you heard me loud and clear here. Okay, so I'm not going to say deeper, but you should know what I'm going to drive at. All right, so the thing is this. Okay, I'm going to show you now the my chart right now, which is the Dow chart for today. Just give me a moment. Here we go. Now this is the Dow chart. Okay. Yeah. Okay. This is Dow chart. I'll take this away. Okay. Yeah. So the Dow chart shows that it is still on the way up. And I told you, as long as the Dow stays above 30,083, the Dow will still be up. The upside resistance is still there. Yesterday it missed by a bit, pull back. Now it's a bit down, but hey, we have seen this enough. Every time it pull back now, the next day it go up. Okay, you literally can see the color, right? White, black, white, black, white, black. So today will be black. I don't know. All right, but anyway, this is the Dow Jones, and the MA is still doing fine. MA and the increase a little bit higher today. The MA level today is at 29,964. Okay, that is the MA level. I'm gonna write it up for you. 29,964. Okay, all right. So now the Dow is at 30,267. So as long as the Dow stays above 29,964, everything is fine. Okay, everything is fine. All right, so that is the Dow on the daily chart, conventional chart. My M15, well, you can see that it's still working like a gem. Every time when it pulls back again, I will know exactly where to buy. So that's why yesterday the market pulls back to about here, and then the color change on the TWB system came in together, bang, just buy. Okay, that is how you use it. You use conventional chart and the TWB system together to see a very powerful impact here. That is what you guys should consider doing it. All right, if you're not too sure how to do it itself, right? Maybe one day for my students, I will do one session with you. Now later on in the TWB, later we do the battle of sexes, right? I will show it live to the people who are attending later. Okay. All right, the weekly chart. Well, nothing has changed. Everything looks good. All right, we have entered our 7th week. Cal, the market is still not coming down. I didn't say the 7th week will come down. I said the 7th week will see the high, and then we might see selling later. I didn't say that the 7th week it will collapse. I didn't say that. I said that we'll see 6 weeks of upside. Then we should see a peak somewhere, which already happened, and then probably the next few weeks there will be some profit taking. Okay, so please don't quote my words, Ken. All right, all clear? If everybody understand what my English, all right, I repeat, 6 weeks of upside, then we'll hit a peak, then the next few weeks there could be profit taking. If that is clear enough, can you key the word clear into the group chat? All right, thank you guys. I need that. I mean, I've been asked every day. Every day I've been asked the same question, and every day I say, please refer to YouTube video, and they say that that's what you said. Oh gosh. Okay, thank you guys once again. 129 people. Thank you guys. Okay, so that is the weekly chart for us. Let's look at our own chart today. Now, today is very. I would like to stress this. Now, today is the triple witching day. Do note that triple witching. So there should be some profit taking today initially. Now, do note something for today. Now, today I realized that my pivot 1 and pivot 2 is very tight. Extremely tight, okay, very tight itself, and it's just only like less than 300 points difference, okay, so that is not good. There's something that I want to show to you. I need to, yeah, I can't really do that. You need to screen your eye a little bit. Now you see that yesterday, I'm gonna draw this here. Yesterday the Dow went up, right? But there's a problem here. The Dow actually went up, but the Dow touched the cage RL. For my student, you know what's the cage, okay? The cage is the 3 lines here, 1, 2, 3, right? The market touches the cage RL and pull back. Now, this is actually a resistance signal. I repeat, touching the cage RL and pull back is a resistance signal. So traders must take note today. So I suspect later on, right, the Dow will come down to 30,182. I repeat, I suspect later the Dow will drop down to 30,182 later. I call for it first. It should come down to here. If it stays above there, U-turn, buy again, okay? U-turn, buy again, okay? Heard me, Okay, all right. So that is the based on the pivot trading, okay? Then I want to show you my own new indicator. This is my own brand new indicator. It's meant for my advanced class. It's called the KRW. So my KRW is called the Kel Reversal Warning Indicator. It tells me very interesting divergence, okay? I repeat, interesting divergence is still on the downside while the market is on the upside. Now, the last time we see something like this itself, right? Let me just show you the last time what this happened. I show you now live. Here we go. Oops, sorry, corner. Can you see this? Can you see this now? Now, this is the last time when this happened, when the market was still surging upwards, right, before the COVID. My KRW indicator was doing the other side. Can you see that now? Okay, so how does this really work? It's very simple, right? All my students know I have this thing called KTR, right? My KTR. So basically what I did is that I use a KTR divergence. Every single day divergence, I come out a mean to calculate whether the market is towards bullishness the next day or bearish next day, which means that, right, from yesterday's market, I can roughly know today will be bullish or bearish, a rough estimation. All right, a rough estimation. And because of that itself, right, it actually tells me that this is actually the time back, right, back in time, it wasn't very good. So this indicator was only recently I created it. So when I backtest this, I saw this one, right, this divergence, right, then of course I tell myself, shit, if I know this KRW earlier, I would have caught the big downdraft back then. Okay, so of course I missed it. Okay, of course I have missed it. I didn't create this I only created this about 3 months ago. And I've been watching this and it seemed to work like a jam, all right, on a day-to-day. That's why am I still positive day-to-day? Because I know that which day will have a high chance of making money on the long side, which day will be much more towards carefulness. So what I'm trying to explain to you now is that for the KRW today, based on what I'm seeing right now, today when the market goes to 30,182, there will be some buying based on what I'm seeing right now on the micro picture. But the macro picture tells me that the divergence here, so traders must be very careful. Must be very careful. Now, to obtain this indicator, you need to join my advanced class to receive it, okay? You need to go for my advanced class to receive it. So, student of mine, tomorrow during our PTP revision, our mastermind class, we will revise this again, okay? All right, so that is the Dow. So how about NASDAQ then? Well, the NASDAQ, you can see nothing is going to stop this guy. It's still surging higher and higher, no holding back. But of course, this morning, there's a little bit of profit taking. So naturally, this 12,510 is no longer needed. So I'm going to put it here because why? This is the highest point the NASDAQ went past and went higher. So if the Nasdaq later on breaks 12,675, then there might be some profit taking. Now this Nasdaq has been going up all the way, and obviously Tesla also gave no room for people to actually stop buying, because every day is still going up, because on 21st is Tesla day, whereby Tesla will be inside the S&P 500. Now I warned this before to you, I just said this before. Now S&P 500 included Tesla, a company that doesn't make money. This is really a craziness, but whatever. So now this thing comes in, and you know Tesla is a very volatile counter, right? Volatile, huh? And now everybody is buying Tesla to put in the ETF to prepare for the S&P 500, okay? So the question comes in is that if anything happened to Tesla, what will happen to S&P 500? And then what will happen to the stock market? Think about this, okay? That's why I realized that all these things seems to conjunct into something rather spectacular from next week onwards. So traders, if you really need to make some money on the market, next week, before you celebrate Christmas, all right, there's going to be a very big movement next week, all right? Very loud, big movement next week. So traders, please be on standby. A lot of things seem to just fall in place. I just got to go deeper. You should know what I'm trying to say. All right, the Dow, the Nasdaq weekly chart is still moving on, so I'm not going to go too deep on that. Okay, so that is the Nasdaq and the US market. Now, gold has went up again, as you can see, all the way. This one look exactly like the dollar chart. The dollar chart also went all the way down. That's why the gold went all the way up. That's how it explains itself, okay? But the thing is this, people say that it's because that the dollar depreciates, that's why people buy gold, right? Well, I put it this way, when the dollar depreciates, value of the stock market actually goes down because of the dollar reduced in prices. Hence, therefore, it's more of the hedging than actually really buying on the dollar value. This is my personal take, because the gold has been, the dollar been coming down for the last 6 months, but the gold didn't really go up as fast as it is. So that's why I say it's more that people are buying gold for the point of hedging. So now you can see the boys are all calling for buy, jumping to aiming higher. They're telling you that because now Moderna vaccines approved, gold also go up. Hey, come on, man, what bullshit is this? The last time when gold came down, they said that the vaccination is ready. Moderna, Pfizer was there. That's why gold came down. Remember that? Now today they say, oh, anyway, now it's vaccine is ready, so let's buy gold. Like, what nonsense is this? So that's why I tell you guys, don't bother with such financial news. It's gonna just kill you. Really, waste time. Follow the chart, trade accordingly. Just do it. Okay, it's full of rubbish. Really. I mean, I do this not to I print out this thing is because this is all on Google. When you Google gold, this is all the news. So imagine if a person doesn't go through the whole entire thing and just see the news and trade. My God, it'd be so hard to be so whack. All right. All right. So now I'll show something here itself. This is the yield curve expectation versus the gold prices. I think this is much more important for you. So you can see that the last 15 years, whenever the yield price, okay, curve comes down, the gold price theoretically actually goes up, not 100%, but most of the time. So that's why now people are saying that, right, because of the steepening of the yield curve, hence, therefore, right, gold will go higher. Okay, so you can see every time this happens, the thing goes. But I want to warn you, if you look carefully, the last few times when this happened, gold price came down, which obviously say, yeah, it happened. All right, from 2000, it came down. Okay, buy you on. So what happened is that later on, if the yield curve continued to slide, then the gold price will go up. No, not actually the same. This time round, it went up. But after that here, the gold price came down. Then this one, it actually goes up a little bit. So it's not 100%, okay? It's not 100%, but still share this with you, okay? Let's share this with you. But my personal take is this, gold price next week, next month, likely there should be some profit taking. Now, I already said it before, if the stock market comes down, the gold will come down. I repeated myself many times. I know that it is again going against fundamental, but already I've said this, okay? So yesterday, gold went up because I mentioned to you, as long as gold stays above opening price, gold will go up to 1877. It really went there, and it went beyond that. In fact, it went to 1896, okay? So it triggered my KCB 1880 and 1882. And I think it's 182 and 1888. Okay, it triggered the two levels there. Okay, so there's a resistance there at 1888. But if those who buy gold yesterday, congratulations. All right, let me just bring it up to you. So this is my Telegram 3G group. So you can see right now, we call for buy in gold on the 16th of December, 2 days ago. I gave the level. I say that gold now is 1851. Later, 1854 can buy. I mentioned 1869 first target, 870 next target, 1872 next target. You see, I really gave that. So all of them hit. Then, of course, we put live trade. It's a live trade, not a fake trade, not a demo trade. And then after that, I showcased that, we bought it. Now, why so low figure? Because we are using $1,000 value bullet size, okay? So, of course, some of you guys have buy even more, right? You all bought so much more. Well, congratulations to all of you. Then I also reminded you that the TP, I'm going to put it there because I just want to get it out before the weekend. But if I say that if you are looking at gold to go higher, shift it up yourself. And of course, later on, gold really hit that very beautiful level. So you see, I mean, no trainers in the market will go live this way, showcase this way, update this way, and congrat you this way. I mean, seriously, it is all about support here itself, really strong support. And of course, we have a lot of people making money, right? Up to 30 people, right? See that? How many of you made money from gold? As many as 30 people made money from gold yesterday. At least those who in the 3G group lah. I think more than that because in the main group, even more people make money. So you guys, this is really live. You cannot lie about this. You can lie about 1 student, 2 student, 3 student. Have you ever seen a community where 30 students make money together? I don't think I see in any advertisement before. Right. So I hope you guys will continue to support us and trade together with the boys. Okay. All right. So the thing is this, that is gold for yesterday. You can see the momentum, how it went. Basically, once it goes past the opening price with the KSI green, no blue bar at the bottom. Now, when there's no blue bar, means the market is very bullish. No blue bar means the market is very bullish. And you can see go all the way up itself until the boys came in to sell. So for today, what do we expect to see from gold today? Let's take a look from the conventional chart. Gold has came down a bit. Now, the thing is this, have I changed my trend line? No. Huh? Why? Well, not because anything, because I have seen this before. The market went up by 3 days. Then after that, the gold plunged back. So I realized that this is my 3rd day. So if the market gold can stay above the MA 200 by today, then my trend line, I will change. But if not, I will wait for a while. Thank you, Cynthia, for putting numbers in for me. Thank you so much. So I'll wait for a while. The question is, Kel, will the gold come down like that? Now, the last time when we saw Moderna and Pfizer reporting about vaccination and stuff, the gold plunged like this. So today, is that the same thing? I don't know. I just leave it alone there. But in terms of RSI reading, we do see some resistance, and FYI, this is a very clear downtrend. I repeat, this is a very clear downtrend. So someone asked me, Kel, if gold were to come down the next wave, how much gold will go down? I can tell you right now. Yes, I can tell you right now. Gold will come down to as low as maybe 1740 to 1720. I repeat myself one more time. Gold, if it's going to come down the next run, gold will come down all the way to about 1740 region. Now, I know that, again, when I say this, again, people are like, what the hell, Cal? We were just having some optimism here and you burst the bubble. Okay, as I say, I'm not here to explain, right? Because I teach something called trend setter, I know that what is happening. So all I can say is gold, if it comes down, gold might, M-I-G-H-T, might, not 100%, go down to 1740. When would that be? Well, I can't be sure, but probably, if I'm right, it will be January, February, latest March. All right, you heard me, yes. All right, now I'm not asking you to sell gold right now. I'm not saying that. I'm just telling you that if gold goes down, please, hopefully all are clear, okay? 1740. Today is 1878. So you see that, again, today's price is so high. This forecast is so low. It's like ridiculous, right? I understand. So that's why I say, take my sharing with a pinch of salt, okay? Or 2 pinch if you have to do that, okay? But don't take it for 100%, okay? All right, that is go for the macro picture. How about micro picture for today? Micro. Let's do a quick one. Running out of time already. Okay, micro picture now, you can see right here today, that is the trade with the boy system right now. Okay, this is gold. Today, gold has just broke below the pivot 2. Now, you know, guys, below OP, below pivot 2, sell, sell, sell. Repeat one more time. Below OP, below pivot 2, sell, sell, sell. So if you sell gold right now, it's correct. As long as gold stays below 1880, the market will go down. How low will that go? It should go down to 1863. I repeat, gold should come down to 1863 later if gold stays down. But if gold stays up and stays above 1880, then it had to go back above OP for buying momentum. So the buying momentum could send gold all the way to 1914. Could send for the pivot 1. But yeah, it has to stay above OP. If not, it's 1863. Okay, all clear? 1914, 1863. Okay, thank you. Everybody clear? All right. Then last one I'm going to show you is the oil market. Whew, absolutely breathtaking. Okay, look at it. The line has never changed. It's still the same. My God, look at the opening price of the oil and then you go up again. Oh my goodness, $48 already. I already tell you guys, if anybody will tell me the next time what to buy, I tell you the next thing to buy is oil. Any pullback on oil, I can tell you this is a buy in oil. Okay, I'm still looking at $53, $54 and 62 the next level. So I'm saying this up front here. Oil, if any pullback of significant size, buy into it and then regularly go back up again. Okay, that's my personal take. But of course, you may say, Kel, but the economy will be down if it, whatever. Yeah, when that thing happens, I say more. But at least I'm telling you now, $54 my first target, 62 next target, but not now to chase. Okay, not now to chase. Wait for a pullback first. Wait for a pullback. Okay. Hang Seng have just traded, so I already crossed 915 mark. My God. Hang Seng yesterday, I mentioned to you, as long as Hang Seng stay above 26,500, Hang Seng is a buy. So Hang Seng really went up. All right, so now Hang Seng is trading upwards. The MA for today is here, and that is about 26,512. That is Hang Seng. But if you look into my Hang Seng chart for today, let's bring it in right now. Hang Seng today opening price is actually slightly below the pivot 2 level. So which means if Hang Seng can go above 26,598, Hang Seng will go up. But look at the KSI. The KSI is red in color. So yesterday Hang Seng was a buy because Hang Seng closes above the KHRL for the first time. That's why next day went up. But that is second day already. So if Hang Seng today stays below opening price and goes below 26,598, the Hang Seng will come back down again. So Hang Seng trader, watch out for that. Okay. All right. So that is the Hang Seng chart and Bitcoin. Right? You want to see Bitcoin? Show you now live Bitcoin. This is Bitcoin now. The day chart. Bitcoin just now came down, touches 22,462 perfectly and rebounded already. Oh my God. Look at it. The opening price was above. And then now you see how it works. Bitcoin came down, touches my pivot 2, 22462, and then rebounded up. Beautiful. All right, beautiful. Okay. All right, when will the Bitcoin be available for trading? We are trying to get it done by mid of next week. Mid of next week. The testing has been okay. Everything looks good. Mid of next week, we should be having that. And all the current active subscriber, I repeat, current active, meaning you have been subscribing to any of my indicators, you will have a chance to use the Bitcoin indicator for free. Yes, only current active. So you're no longer active subscribing it, you won't get a chance to do that. Okay. So more details will be out shortly later. Okay. Before you go, don't run away because there's something to share with you. Very important. Don't go away. Not about my causes, but something like this. Now, because of Bitcoin, I was spot on, right? Okay, right. We're 12 days away from my class fee before it goes up. Do note of that. 12 more days. But I'm not talking about this today. I'm talking about this. I was spot on for the Bitcoin, right? So people ask me, Kel, what's my take on Bitcoin? Now, my take is this. All right. I believe that Bitcoin has hit 23,000 level. And recently, the buying on Bitcoin was also the buoyancy of the dollar because the dollar had been depreciating. People need to find something else to speculate, right? So I suspect that, listen to me, I suspect that the Bitcoin at this time now is not the time to run in to buy. I suspect that, right, Bitcoin should be coming down soon. Yes, again, you hear me correctly. Now, again, I'm not saying that I'm a Bitcoin whale. but I do suspect that there will be some profit taking the next few days. And if the stock market do come down, then there will be a possibility for the Bitcoin to fall back all the way to 19,500 level. Now you heard me loud and clear. I'm not saying that it will come down immediately because my KSI is still green. So the whales are still not unloading yet. They're still buying, okay? And my KCX is still very bullish now. So I'm not saying that it's a time to sell Bitcoin yet. But if you have Bitcoin, take some profit first at this current point now. Then if the Bitcoin do come down, 19,500, right? For a student of mine, you should know that is the KCB there. So I suspect that there will be some profit taking later. And that is whereby I'm informing you, be very careful, okay? Just be very careful, all right? So this is what we traded yesterday. One of our friend who trading with another broker, just a test run. And you can see that he basically went in to buy and make some money, right? Yesterday, only 2 trades to buy Bitcoin. One is before the 23,000 run up. The other one is when he rebounded back from the bottom, okay? So that's how Bitcoin was. And before you go, the way I see it is, if you want the rainbow, you got to put up with the rain. True. Seriously, guys, if you really want to make big money in the market, you really have to really do all this work and basically get yourself prepared. And that's why I prepare myself. Now, FYI, you can realize that my MAO is longer than usual because now I'm cutting away weekend MAO. I put all the interesting stuff right on the daily MAO so that you can get the live updates every single day, the accurate data. And after that itself, right, okay, basically you can use it to your advantage, okay? All right, thank you so much for today. I really hope you enjoyed this session once again. All right, make money for today. Today's Friday, enjoy yourself. It's still pouring, so if you're outside, put an umbrella and be careful, okay, guys? See you guys later, as in those who are seeing me later. Bye-bye. If not, Monday on MAO. Bye-bye. Cheers.